What's going on, guys? Quick update video. New low today on AMC, 389 roughly was the low of the day. It was actually pre-market, somehow closed the day green. Very strange price action on AMC today. Not loving the ambiguity there. Still could be a coin toss where we could just, blast off from here, finish the uptrend in the channel, and just squeeze from where we are now. In the same breath, we could also be coming down to the lower low, the third bottom, the final landmark on the macro. I'm leaning more towards that's the case, where we're going to be coming down to back down to like the 3.6, 3.7 range, and more than likely forming a lower low. Especially after seeing today's price action. It's very, very weird price action today. SPY pretty much perfect, exactly what I called for on SPY again. Got the double bottom I was looking for at 437. So with that being said, let's just jump into the video, and we'll start with the macro on SPY. Once again, descending broadening wedge for a year, and you break out here, you retest, reclaim the ascending triangle, break out of the ascending triangle, and then you find more upside to 444 before you pull back, bounce off the 20, double top, and now we have pulled back once again. Day 70 in a row, closing over the 200 EMA, I believe 70 days in a row now, and golden cross on the daily, all of which is very bullish. And I'm just going to keep mentioning this every video. Touching on SPY daily because the previous two times AMC and the rest of the meme basket was squeezing, SPY was rallying to the upside in a very similar fashion to what we're seeing here. This range that SPY is trading at, we haven't seen since April 2022, and from October 2022 until today, forming higher highs and higher lows to the upside. So this looks very, very bullish, and that is pretty much that. Jumping into the symmetry on SPY once again. Blue box is your middle, lowest low here, one break above the ascending triangle here to retest the macro of the wedge, coming into the red, breaking below the horizontal line at 380 on both sides. On the left, came a little bit lower to retest the wedge once again. From there, bounce up and reject 418 on the dot on both sides. Coming into the green now, you come down, bounce off 380 on the dot on both sides. And then you get the uptrend, brings you to 430, three touches on it right here, indicated by the purple circles. Break through that, reject 438, break through that, reject 438. And then you got the move to 450 over here. Over here, we didn't get the full move to 450. We came up to 444. From 450, we were expecting to pull back to 438, establish support before moving higher. I said because we didn't come all the way up to 450, it was the likely case here would be that we would pull back slightly further than 438, pulling back to this horizontal line at 430. And that's pretty much what happened. It came down to 431, and then we got the double top, same exact way as we saw over here. So when you reject 450, come down, form support on 438, double top slightly higher, and then you come down one last time and form a W at the middle of the range. And same exact thing over here, where this was the pop through. We didn't come all the way up to 450, came up to 444, and because of that, we didn't come down to 438. We came lower, and then we got the double top slightly higher over here, and then came down here, and now playing out the W in this range. So once again, SPY is extremely bullish from every possible way you could possibly look at this chart. Very, very bullish, perfectly symmetrical. The touch points are perfect, and even up to today, still playing out perfectly symmetrical. This green circle now would be the symmetrical equivalent of what we saw back here, and we are in the last part of this now, where you pull back to the middle of the range, play out a W before moving higher. So that's what it's looking like now. We got the same exact thing over here. So jumping into the uptrend on SPY, once again, this is the end of the ascending triangle here, and where you fake out, come down to support, and then you break out, retest, claim this bull trend, and you ride this bull trend up to 444 was the local highs. See some downside, gap below the bull trend, trading a descending channel here for a week before breaking that to the upside. And then we got the double top we were looking for here, slightly higher than the previous highs. And then from that double top, I said we're going to come back down now to 436 to 438 range, somewhere in this range here. Establish support there, playing out a W before we move higher. So exactly what happened when we broke down from this, bounced down 437. From the 437 bounce, I said we're going to find upside to 442. Exactly what happened. 442.60, I believe, was the high of the day here. And then from there, I said expect more downside, coming back down to double bottom at 437. Exactly what I said is what happened. And then we bounced off 437 again, and now we're seeing some upside. So I zoomed in on the 1 hour on the symmetry slide that I just showed you, just seeing how it played out on the other side. And theoretically, if it played out the exact same way, what would happen now is we find more upside to 442 again, reject there, come down, and then bounce on 438 roughly. and then that would be the last point of support there before moving higher. And we'll just get into that as the when the time comes. More than likely, the way this is going to play out, I believe CPI is being reported on Wednesday. I could be wrong, but more than likely, the way this plays out is tomorrow we get the upside back to 442. Reject, probably start heading down towards end of day, and then Wednesday pre-market come all the way down to 438, and then CPI data just takes us straight through. It's probably going to be CPI data is probably going to be pretty good. And that's pretty much that. Perfectly symmetrical move, very, very bullish, and ripping to the upside here, breaking both macro patterns. Once again, touching on SPY daily, because the previous two times that AMC squeezed and the rest of the meme basket, SPY was rallying to the upside pretty much the same exact way as we're seeing here. So very, very bullish on SPY. Now getting into AMC, starting with the macro, once again, descending trend line from 2017 highs right here, all the way down to when you squeeze in January 2021. Which would be comparable to the descending trend line here when we broke down from the flag in November. From the June highs here, you have this descending trend line, same exact way. You have your macro fractal break right here, this gap down, which takes you into this W type pattern here before you actually break down to the downtrend. And you have the exact same thing here. You have the V and then the gap down, the macro fractal break, play out this W sideways move before you get into the downtrend. Once again, the downtrend, you're just laddering down one step at a time. The green more or less being a W, same on both sides. The red more or less being a cup, same on both sides. And then the blue coming down, bounce up, come all the way down, curl up towards the end, come down, bounce up, come all the way down, curl up towards the end, before dropping to the flat portion here, where you have 3 touches on the bottom, 1, 2, and 3. And from the third touch, you form an uptrend, breaks you out of the triangle, and you squeeze. That's what we're going to be looking for now. So 1, 2, and now we are on our way to our third bottom. Now it looks like formed a new low today, a new local low, 489, pre-market wick down, and then somehow closed the day green. Very sketchy price action today. I'm expecting to come the rest of the way down and more than likely form a double bottom, if not a double bottom, slightly lower than what we saw on this April knife here. More than likely, there'll be some court news, and that'll happen after hours. Cost to borrow is like 1,000+% right now. The algo getting this thing down to mid-3 range is going to cost a lot of money. I'm assuming this move that we're going to get here is going to be after hours, very similar to what we saw in April. So that's pretty much that. Now jumping into the other macro, same one I just showed you, just a little bit different here. Colored boxes removed from the flat portion and some lines. So macro fractal break right here, macro fractal break right here. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6 takes you into the blue. And then you drop down to the flat portion where you have 1, 2, 3 touches on the bottom before you form an uptrend, which breaks you out of the triangle, and you squeeze. So 1, 2, and now 3. Again, there's 2 different scenarios here where the bottom would be in. Leaning more towards we're going to get the rest of the move down, especially after seeing that wick pre-market today. So that's pretty much that. And I touched on this in one of my other videos, but I'm touching on this again, where so the downtrend here brings you all the way down, playing out the exact same way on this side. We're actually forming support on top of this. So the flat portion that played out prior to the January 2021 squeeze here, we're playing the exact same thing out again, but on top of the range as support. So this looks very, very good. Now, getting into the micro, and I'm not going to be showing the candle chart, I'm just going to be showing the area because this is it's crystal clear. You can't really mistake it here. So again, what we're doing for the micro is zooming in on the flat portion, the orange, purple, and blue versus the orange, purple, and blue on both sides. The flat portion here, which breaks you out of the triangle and takes you to your squeeze, which is where we are now at the end of the blue, on our way down to the third bottom. So that's what we're going to be looking at now on the micro. Not going to be candles, it's going to be an area chart, but same shit. So you have the orange, purple, and blue versus the orange, purple, and blue. The flat portion on both cycles here. Pre-January squeeze on the left and current cycle on the right. So in the orange, you come down all the way to your first bottom, and you have chop at the bottom of the range here. Same thing on this side. In the orange, you come down first bottom, you have chop at the bottom of the range here. And then from there, you pop up, and you have 3 peaks in increasing height. Each peak is higher than the last here. And then same thing over here, you pop up and you have 3 peaks in increasing height. The third peak is actually the end of the purple. The purple is more or less a cup and a higher high on the right, and the exact same thing right here. And then from that the end of the purple, you come into the blue, you come down, break below that horizontal line, bounce above, come down, break below the horizontal line, bounce above. From there, you get your second bottom on both sides. You get your second bottom here. From the second bottom, you bounce up into the tri-peak iteration on both sides, same exact thing here. And then from the third peak of the tri-peak, you get downside one more time down to your third bottom. And we have the same thing playing out over here, downside back to our third bottom now. Just as far as the bearish case goes, where we would be, so from the third peak, you actually come down and form this cup type thing here, and then you get this descending channel right here. More likely than not, where we would be is at the end of this descending channel now, about to really break down to the bottom. And again, more than likely, this is going to play out fast, very similar to what we saw in April, just the knife that we got. More than likely, that's what's going to happen here, where you get the cup, same as here, and then you get some descending price action right here. So more than likely the way this plays out is the court news drops sometime mid to late this week, and it's after hours, and then we just get a fucking just straight knife down the way we saw in April. That's what I'm expecting. So the other case here, the bullish case, and I'm not going to even bother going over this because I don't think it's the case right now, but there is a case for this where the third bottom would be in, and then we would have been this pop here, and then you pull back here and play this W. You have sideways price action here. Same thing here. Just the wick pre-market kind of throws everything off of the bull case. That's why I'm leaning more of the bear case here, where we're actually going to get the lower low. Again, the lower low, the third bottom, was what we were looking for originally. So you could see it here. You get a lower low than the second low. So that's what the original plan was getting a lower low than the April knife. This bottoming action here was pretty convincing, though, having wicked 7 times to 401 perfectly. Then we got the pop off, and it looked very similar to the move that was playing out here. So, again, I'm leaning more the bear case, where we're going to get the lower low here. Again, we're tracking this faster. We are tracking this roughly 3 months faster than the way it played out in January 2021. And again, from the third bottom until your peak was 22 days. And now, assuming that the third bottom is now in, we're going to be waiting for that third bottom. And then 22 days roughly, and more than likely it'll be quicker than 22 days because we're tracking this faster, would be our squeeze. Take that with a grain of salt, obviously. As the time comes, I'll just do update videos daily, and we'll be talking about that. As far as time range goes, because I know some people are probably going to be asking this question. As far as time range goes, for squeezing, nothing changed from my last video. I said end of July, early August. I'm still same thing. Doesn't change, especially if we get the knife this week to the lower low. Once we get that out of the way, the lower low here, that is the final landmark. That's the final landmark on the macro. That's the third bottom. From that third bottom is the uptrend. The uptrend breaks you out of the triangle, and that's it. Just sayonara from there. So that's pretty much it for the micro. Now I have a few new charts to show now, and we'll start with this one. There's a lot of shit going on here. So this is looking at RSI. On both cycles. You have the January 2021 cycle on the left, the flat portion once again, and then the current cycle on the right, the flat portion. So, and I have the RSI underneath, and it is the exact same thing, which makes sense because the price action is the same exact thing as well. The movement's the same thing. So the RSI matching would not be much of a surprise, but I figured I would just throw it in the video. So, in the orange, you're pretty much starting from oversold here, come down, break below, overbought, same on both sides, and then you pop up. You have some chop here, would start climbing up, and then you pop back above, overbought, same on both sides, and then you get a cup, and you pop through it again, same thing here. The purple, you have the cup, same thing, you bounce off of oversold, and then come back up to overbought. I don't even know why I'm trying to explain this. You can pretty much see it. The red, same thing, you break below right here, same thing, you break below here, bounce up, come down, bounce up, come down, and then you have two pops above, as we do here, and then you come down, bounce up again, you come down, bounce up again. This bounce slightly higher, which is fine. It's never going to be fucking perfect, but same story here. It's more or less a W in the green with a lower low on the right. So you have a W, a descending W type playing out here. Same exact thing you're seeing here, a descending W. And then at the blue, you break below the oversold line one more time on both sides. You poke above it, indicated by this green circle, which would have us right here. Again, this would have been the cup, and then the descending price action that we're getting now. So that would be the pop above, and now we'd be on our way back down to the oversold section again. So that's what I'm going to be looking for, where this pop right here would have been like the cup that we have here, and then we have the descending price action. So I'm expecting to come down to a lower low on the third bottom now. It looks like that's going to be the case. Doesn't change anything. That's just what we're going to be looking for now. I may continue to touch on this chart daily. I don't know. It's a lot of work putting all this shit together. So, and then this is the same exact thing now. So the RSI again on the bottom is the same thing. The RSI is the same, and then on top is the same thing I just showed you, except it's area now. And I threw the 20 and the 50 EMAs on too. So I can go over this again as well. And on the left again is the January 2021 cycle. So the green is the 20 EMA and the orange is the 50. So the green is below the 50 this whole entire time, hovering under it, and then you get the wave type move that I talked about, where you break above, come under, and then you break above again, which takes you to the end of the purple. So you have the same exact thing over here. The 20 is under the 50 the whole time. You break above, come under, and then break above again. Same exact thing. And then from there, you break below the 50 again, and you do over here, and then you cross in the tri-peak, and then you come underneath again. So cross in the tri-peak, and then you come underneath again, and that's where we are now, just hovering under the 50 again. The next time that the 20 EMA crosses the 50, and this is going to be a fucking dead-on indicator in my opinion. The next time you see on the daily the 20 EMA cross the 50, and this isn't the daily, it's the 4-hour, but same story for the daily. The next time you see the 20 EMA on the daily cross the 50, you know what fucking time it is. So that's what we're going to be looking for as far as the EMAs go. RSI, I figured I would just throw it in here, just, you know, more shit to add to the pile of this is tracking legitimately perfectly. So that's pretty much that. And then another thing would be the MACD histogram. I never touched on this, and it doesn't really line up the greatest, not nearly as well as the RSI, but there you could see it. And I'll just go on over the blue here, where in the blue you turn red here, and then you flip to green, and then you flip to red, and then same thing. So you have red, and you flip to green, and then you flip to red. And again, that flip to red would be lining up right here in this descending price action that would be taking us down to the third bottom, which is where it would be now. And that's pretty much it. So, you know, I'm just throwing shit in here just to, you know, it's just whatever. I don't know. And then APE, again, touching on APE. So in April, when AMC knifed, APE ripped, was this rip right here. It became very apparent that we were trading inverse APE at that point, and then coming back down to this pattern, spent 3 months in this pattern, very sideways price action here, very barcodey towards the end, before you break out, retest, pop up here, you start curling down, and then today, pre-market, APE fucking just took off to, what was it, 238 was the high of the day, pre-market on APE. That was at the exact same time that AMC saw that pre-market knife to 389. So clearly we're inverse APE still, and APE looks much more bullish than AMC does as far as the chart goes right now, having broke out of this breakout, retest, upside, come down, curling back up, and then a new high today. So APE is very clearly bullish right now, and AMC is very clearly bearish, having formed a new low today. So the case for AMC and APE meeting at $3 for the conversion looks like what's going to happen, and I'm assuming we're going to see that this week, where APE just takes off here and AMC gets the knife that we were looking for to the mid threes. Conversion probably goes through there, and then the uptrend, and then the break from the triangle, and then the squeeze. So that's pretty much it for the video. Very weird, strange price action today on AMC, but you know, having formed a lower low today, a new local low today, and broke below $4, broke sub 4 here, it looks like, and you could very clearly see this is descending price action here and a new low. It looks like we're going to be coming back down to the lower low. Again, doesn't change anything. That's what we were looking for originally. That bottoming action at 401 looked convincing, so I thought possibly the bottom could be in here, and it looks like that's not the case, and we're going to actually be getting the lower low that we were originally looking for. So doesn't change anything. That was the original plan, and that is what I'm going to be looking for now. 360, anywhere from 350 to 370, I'm assuming would be that lower low that we're looking for, and that is your last buy. That is your last buy-in on AMC, your last buy-in opportunity. If you have not financial advice, just speaking for myself too, any powder that I have left over is going to be going into AMC if we get that knife to 3.5, 3.6. So that's pretty much it for the video. It looks very, very good. I mean, bearish, but you know, it doesn't really. That was the plan originally. Was the lower low here, so it looks good. Macro's perfect. Just looking for the lower low now. That is the last landmark. That's it. There's nothing left after that. If you get this knife to the 3.35 to 3.7 range, form a lower low than what we saw in April. That would be the third touch on the bottom, on the flat portion, same as we saw back here. 1, 2, and 3 touches. 1, 2, and 3 touches. That's the last thing we're looking for. That is the final landmark. From there, it's the uptrend, very slow uptrend, breaks you out of the triangle, and squeeze from there. The mean basket is pretty much synced up as well, so it's probably all going to happen at once. Again, I'm leaning MOAS here. I'm leaning the squeeze is going to be the MOAS, so the mean basket is probably all going to squeeze at once. Yeah, that's pretty much it. I mean, you guys saw the live stream. If you haven't seen it, you should watch. It's a great live stream to watch. About a half an hour. Sokotoa and I, we did a live stream together, and he showed the overlay of GameStop on AMC. It's the same thing. Same exact stock. So AMC and GameStop will be squeezing at the exact same time, and likely the rest of the mean basket as well. So that's pretty much it for the video. Once again, we're looking for the lower low here at $3 now. We don't have to get it. There's a case that we just pop up, like we pop from here. I am leaning more towards winning at this lower low, and that's pretty much it. So I'll catch you guys in the next one.